And people are like, oh, it's going to zero. I'm like, no, this is a big buying opportunity. And approving a futures ETF, and you can go back to approval of the creation of the futures the first time, December 18th, 2017, was the dead top, right? And there's a reason for that, is when you can create something out of thin air, whether it's money, right, like my shirt, or whether it is a barrel of oil, a brick of gold, or a Bitcoin, that creates a problem with supply. Right? In the old days, if I want to sell you a barrel of oil, I actually had to have a barrel of oil that I controlled. I couldn't just say, oh, well, I'm going to make a paper barrel of oil and sell it to you. And as long as we settle up before I have to deliver it, I'm all good. So if you look at oil prices, they're super volatile, particularly when they spike because people just keep issuing new paper barrels of oil. And then you're prone to a period of speculators coming in and pushing the price down through shorting. And I think that's exactly what's happening in Bitcoin right now. First they ignore you, then they laugh at you, then they fight you, then you win. And 2009 to 15 was first they ignore you. Like a bunch of nerds, geeks, who cares? It's nothing. Science project. Then it's they laugh at you. So 16 to 21, look at those nerds and geeks and their magic internet money, ha ha ha. Well now, 2022 to 2027 probably, is then they fight you. And the fight, I mean, it's gonna be a bitch. I mean, it's not going to be fun. And everyone's like, well, no, I mean, they're gonna rally around it. No, they're not. The banks are being disrupted, and that's good, right? I mean, innovation and technological disruption is a positive for society. We're gonna take $7 trillion of waste that exists in the traditional financial markets and liberate that, which is good, but the people that collect that $7 trillion don't want that to happen. So, look, BlockFi, we invested in BlockFi, and they got fined $100 million. For what? Oh, well, you sold unregistered securities. But you said these weren't securities. So how could I sell an unregistered security? Well, you're paying interest on stablecoins. Right, but those aren't securities. So once they now have a regulated product, because everyone's like, well, don't file a regulated product because then you give them control. I'm like, no. Regulation is good. More regulation is good. More boundaries, more rules is good. So it's a long way of saying, I think we're in this then they fight you stage. I think it's gonna be hard, but you gotta zoom out. Just like everything, people say, oh, look at the correlations. Everything's highly correlated. Right? And this idea that everything correlates to one in a crisis, right? Stocks and bonds, they're only 30% correlated, except they're both going down right now. Well, wait a second, that's not supposed to happen. Well, right, because what happens when stocks are being liquidated, as they are, hard, and there's lots of leverage, and you get a margin call, you don't get to sell what you want to sell. You have to sell what you can sell.
Liquidity. Gold,
bonds, Bitcoin, and there are those that do get it. And if you go back to March of 2020, Bitcoin fell 50% in like 12 hours or whatever it was. And I'm off a little bit, but hit 50 something, 5,200, and people are like, oh, it's going to zero. I'm like, no, this is a big buying opportunity. And you've heard me say this, right? Investing, only business I know, when things go on sale, people run out of the store. When you put anything on sale, put wedding dresses on sale, people will people will run over each other to get in the store to buy the stuff. But when stuff goes on sale in the markets, ooh, I'm out. And the further the price goes down, the faster they run away. Like, no, that doesn't make any sense. And I'm a big believer that the first loss is the best loss. People say, well, that doesn't make sense. You're saying buy things that go down. I'm like, no. First loss is the best loss if you bought something because you don't understand it. And if you bought it because the price is going up, then you better sell it soon. If you bought it because you think the price is below the value, then you should definitely buy more. And that's a very big difference between an investor and a trader slash speculator, or worse, gambler. And that's, I think, the problem we have right now is we're still getting rid of the gamblers. And so my advice there is some leverage is fine, but on assets that make sense. Like Warren Buffett, everyone thinks he's this grandpa stock picker. No, he's not. He is not a stock picker. He is a levered, margin or tax deferred, brilliant structure. I mean, he is a genius, but he's not a genius for what people think. He bought Apple. Why did he buy Apple? Not because it was in its high growth phase. He bought it because it paid a nice dividend and bought back shares. So he takes that low volatility cash flow and levers it up with negative cost of capital money because he has an insurance company. It's a genius strategy. But an 80 vol asset, you can't lever that very much. If you're buying an asset truly for a long duration, it's a trust for the kids or it's to fund retirement or whatever it is, you actually shouldn't look at the price.
Never.
Unless you're looking at it to say, okay, the price fell below my estimate of value, so I'll buy more. But a better way to do that is just pick a period. I say this all the time.
Just dollar cost average.
Just dollar cost average over time. And it's funny, I did the thing, and what it was, 2017 or 18, and it was on CNBC, and while I was on the show, the price went from 10,000 to 8,000, like literally in the 6 minutes I was on the show. And Melissa Lee says, what should I do? I'm like, buy it. And just the look of incredulity. And she said, well, you just say that no matter what the price, even if it went to 5,000. I'm like, yep, I would. Buy it today, buy it tomorrow, buy it next week, buy it. Don't buy it all at once. Don't ever buy it all at once.
By the way,
in the old world of innovation, where it was pretty localized, each jurisdiction had their set of rules and regulations because nation states mattered and borders mattered. That changes in crypto because now nation states are not quite as important. Borders don't really exist. I mean, what is the border of the metaverse? And if you think about, take China. China says, I'm going to ban exchanges, 2017. Price of Bitcoin falls 40% almost overnight, and everybody freaks out. And what happened? Those exchanges picked up and moved to Japan and South Korea. And within weeks, the hash rate's right back the same. Same thing with Bitcoin mining. Last year. We're going to ban miners. What did they do? They picked up, moved here to Texas, moved to Kazakhstan. I met a guy down in Miami who was one of the Kazakhs who built this giant mining facility with all the people that came out of China. And it turns out some of them stayed in China. If the recent data shows that they're actually still doing mining in China. And we freak out about this idea that regulators are going to, but the thing is, if you over-regulate, if you try to put it in a cage, what's going to happen, it's like squeezing a balloon, the air is just going to go somewhere else. And so this idea that regulators here are going to set the rules is crazy, because if you make the barriers or the boundaries too small, it will just push innovation outside. And we're going to choose whether we want to be in favor of innovation and wealth creation or we want to be against it. Now, our track record on it is not actually very good, right? Taxation is a good example. Right? Why would you ever tax innovation and wealth creation? Why would you tax income? It makes absolutely no sense. But ultimately, I look at this innovation cycle is so profound. Look around us, right? You're sitting here, like say, your mind being blown every half hour, except with this one, present company excluded. And it's because the talent migration into this space, it's like nothing the world has ever seen, right? People from all walks of life, from technology, from finance, from politics, from societal focused companies, all seeing that this movement can truly change the world. So how do you stay calm? I said, well, one, diversification. I don't have all my eggs in one basket. I have a lot of baskets, or a lot of eggs in the basket, and I watch the basket. Two is constantly dollar cost averaging and rebalancing, selling the stuff that goes up and buying the stuff that goes down when it's cheap. And then there's just a discipline to wanting to focus on where the innovation is happening. This innovation as an asset class. And the amount of innovation in this space is, again, it's unprecedented. It's because the talent migration is unprecedented.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.